Hello everyone, welcome to Late Night Stocks Commodity Series. My name is Gökhan and in this video I'm gonna talk about Occidental Petroleum. This stock made more than 2x in 6 months and it seems the stock price stabilized between $55 and $60. The average stock price target is also $60, but I believe this company has more upside potential. First, we should look at what they do. OXY produces energy and essential products to sustain and improve life on our planet. Another important point is where they operate. OXY operates world-class energy and chemical assets around the globe, including in the United States, Middle East, Africa, and Latin America. As you see, they don't have any facilities in Russia. That's why the company didn't affected by the sanctions against Russia. Let's continue with fourth quarter earnings conference call. Last quarter, the company generated $2.9 billion free cash flow. They also repaid $2.2 billion debt. Another important point is OxyChem had highest earnings in over 30 years. The company wants to reduce its debt and drive net debt towards next milestone of $20 billion. In addition to that, they want to raise dividend to $0.13 per share per quarter. The company wants also reactivate and expand share repurchase program. The target is $3 billion of shares. Long story short, the company has a very healthy financial situation now. They reduced the debt, raised the dividend, and continue to share repurchase program. Gas gap in Europe drives US LNG exports to record high. About half of the record US LNG volumes shipped last quarter went to Europe, up from 37% earlier in 2021. The Russian invasion made the US an important gas exporter to Europe. By the way, LNG is basically methane. I showed you this news because the Russian invasion may boost the company's revenues. Now you see the average realized prices for oil, NGL, and natural gas from ongoing operations for each of 3 years. The natural gas and NGL prices are almost doubled in comparison to pre-pandemic levels. The company sold a barrel oil in 2019 for $56 and in 2021 for $66. NGL prices changed dramatically. In 2019 it was $70 and last year $30. We see the similar situation for the natural gas. The price was $1.35 and last year $2.87. The commodity prices are exploding and this year it seems they will be still volatile. Last year, the company had the total net sales of $25.9 billion. The net income was about $2.3 billion. Last year, the company made huge losses, which was about $15 billion. The income depends on highly oil and gas prices, but the company wants to be also profitable at $40 Brent oil price. Expense items are important to understand the business. The major expenses are oil and gas operating expense, transportation and gathering expense, chemical and midstream cost of sales, purchased commodities, depreciation, depletion and amortization, interest and debt expense. The oil and gas operating expense were similar during the last 3 years. This means rising oil and gas prices increases the profit margin of this company. We see the similar situation in other expenses. In other words, rising oil and gas prices cause an exponential growth of the earnings. Despite relatively high stock price, Berkshire Hathaway still buys this stock. By the way, the CEO Vicky Holub said last month that supply chain troubles and labor shortages make it difficult for oil companies to ramp up production to meet demand. This summer, a lot of countries will ease the COVID restrictions and people will start to travel again. This will also increase the demand. Another important point is Berkshire also has warrants to buy $5 billion of additional Occidental stock at $59.62 per share. Regarding this news, Warren Buffett is sitting on Occidental warrants that could give him a 23% stake. We still don't know whether he will execute it or not, but in that case the stock price will skyrocket. Now you see the EPS expectations for the next quarters. Last quarter the company reported $1.48 EPS and beat the analyst expectations. In Q1 2022, the analysts expect less EPS in comparison to previous quarter. When we have a look at the crude oil price, we see much higher average price than previous quarter. In this case, I can say the company will beat the estimates. For the Q1 2022, the analyst expects up to $8.7 billion revenue, and for the Q2 up to $12.4 billion. The analysts also increased their EPS expectations. For example, 90 days ago the expectation was $0.91 and now $1.7. It is almost doubled. US Energy Agency revises up oil price forecast for 2022. International benchmark Brent crude now estimated to average $105 per barrel in 2022 and $88 per barrel in 2023. I think the oil prices will be very volatile this year, and I don't think we will see a sharp decline next year. Let's continue with company's valuation measures. The company had on Friday a market cap of $53 billion. Its trailing P ratio was 27 and forward P is about 15. 15 is a reasonable number because S&P 500's average P ratio is above 20. When we have a look at the historical stock prices of this company, we see almost $100 in 2014. Now we have a rising inflation, huge energy demand, and sanctions against Russia. The President Joe Biden will release 1 million barrels per day for the next 6 months, but the volume is too low in comparison to demand. Just in the US, the daily demand is about 20 million barrels. In this case, 1 million barrels just make 5%. When we summarize what I told you in this video, the company has a good financial position now, and the oil prices will be volatile this year. Last month we saw $130 crude oil price. When we consider all the major factors, I think the stock price can hit $100 again. This makes 40-50 upside potential for this stock. Of course, this is my opinion and not investment advice. Please do also your own research. I hope you enjoyed the video. Thanks for watching till the end. Please give a like and don't forget to subscribe to our channel. Bye.